Let me record. So with what I was explaining here, so I guess you guys, everybody is clear on this particular one, right? So now, let me now show you guys something again, based on these two things and how a lot of you have been trapped and how a lot of you have been making that big mistake. So now, a lot of people have not really explained this to you. Now, using this concept of this thing, now, I want to show you guys something. Let's say we have high, low, high, low, high, low, high. Then, market wants to break structure. Listen attentively, guys. There's two types of break of structure that you would have. You will have one like this, A, B, and C. And you have one of this, high, low, high, low, high. Then you have A, B, and C. Now, this break structure 1 and 2. This break structure 1 and 2. So, guys, can somebody explain what is going on here and what is going on here? And this one now, we have a POI, a drop base. I'm coming. A drop base and a drop. And this one too, a drop base and a drop. I'm sure with this drawing, you guys are already getting what I'm trying to say. Now, this guy is also a base, but does not mean I am going to trade it. No, I am not. Because I know it's as a result of what? An external liquidity that come after a break of structure. So I would investigate this pullback because this pullback is not a violation point. This base is not a violation. So I would now go back to the ABC pattern rule. Then I will investigate this guy to see if it has probably the type 1 of the incomplete pullback or the type 2. If I am able to get that, then I'll be anticipating market does this and sell. But for this second one, now, I know that this guy is a valid base, right? So which means I can sell from here directly. So after selling from here directly, then I now have A, B, C in form of something like this. I now have like this, A, so this is A, B, and C. So which means what? I will now look at what is going on here, then use this B leg after selling from this first base to target external liquidity, then sell off. Does that make sense, guys?
Yeah, makes sense. Yes.
Okay. So in summary, yeah. So now, I have explained immediate base. This is what we call immediate base. What is immediate base? These are bases that happen in the immediate structure. Simple English, immediate. But the main problem that we have when it comes to how do Kama know that this price is going to return from here? How did he know? It would be as a result of one, past external liquidity, or past valid base, open bracket, unmitigated. What does that mean? Now, we all know that I said when market is moving like this, break structure, pullback, this is an external liquidity, then it's sell off. So now imagine market does this, then it keep going. Then it keep going to the future. Then all of a sudden market start coming. Remember, all these guys, this guy that left unreacted to is now what? Past external liquidity. So those areas would be used as the area of probably not necessarily going to create a new low, but you are going to get a short from there that can be responsible for a whole daily market cycle. Right? So now, based on this base that I was explaining now, so you would notice that not all price would get mitigated immediately. So at a point in time that you are trading, there's something we call investigation. You need to investigate where your price is coming from. So which means if you have market does this, then you have this, sorry, high, low, high, low, high. The market does this. Then market keep going in the future, keep doing a lot of inducements without getting to this guy. Sorry. The market keep doing a lot of inducements without getting to this guy. No matter how far it is, no matter whatever the price does, whenever price come to this past price action that it was unmitigated base, it would get a sort of reaction from it. So because of the fact that you guys are too lazy to investigate what has happened in the past, you only care about the present, and you forget the fact that what would happen in the present is as a result of what happened in the past. So that is how I will have known that, oh, this guy is an unmitigated base in the past too. So which means, let's say the market is buying and I have this guy as my demand, I have this guy as my liquidity, then I know that once price gets here, I can short once I get my confirmation to clear this guy then buy. Because I know that this guy is not just coming from a random area, it is being sponsored by this unmitigated base. Right? So, having said this, now this is now another tricky part of it. I made a tweet. I was like, oh, I've not made a tweet. I drafted it. I was like, if your strategy does not give room for do and don't inside your strategy, then you don't have a system yet. If you don't have a do and don't inside your strategy, that means you don't have a strategy yet. If Kama said, boom, 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 this is a valid base, break structure 1, break structure 2, there's still something that can happen that will make me not to trade this thing, even though it does this. There's still something that can happen that will still get it cleared. So that is what we are talking about. We have talked about the valid ones. We have talked about the invalid one in terms of the external liquidity. Now, let's now talk about the valid ones, but we are not still going to trade it. And you guys will understand. So that is where there's something I call smart money reversal. Smart money reversal is a form of an external liquidity grab that breaks structure, or is a form of what? A drop, base, and a rally. Smart money reversal is a drop, base, and a rally inside a rally-based rally. Now, don't get it twisted. This is rally-based rally. But a valid base must have a what? A drop, base, and a rally inside it. It must have. Let me now show you a chart representation of it. Because we need, apart from the fact that this guy actually manipulated this zone, the next question is how many people got manipulated? Let me break that down to you. Now we have a low, high, low, high, low, high, low. The market does this. This market is supposed to sell, right? Then it got here, it does this. It broke structure, which means a lot of people like you will feel like, oh, market has gotten to my supply, it has broken structure. Remember, it did not take care of this eye. I want you guys to follow me. It did not take care of this eye before it breaks structure. But if you have low, high, low, high, low, high, low, then it does this. It now breaks structure. It's another thing entirely. I want you guys to follow me attentively. Now, this one breaks structure, drop a base, break structure, pull back inside. This one did not drop a base. It's still inside and it broke structure. What does this tell you? This tells you that, and immediately we now have this. This tells you that this is a rally base and a rally, but the base, which is this, has a what? A drop, base, and a rally. Because that base is responsible for what? For a manipulation. So that is a valid base. So in summary, a valid base must also induce. And what is inducement? The purpose of induce means you are trying to deceive someone. That's the meaning of induce. So now, everybody is seeing this sell. But risky traders, aggressive traders want to sell directly from here. They set their limits. Some people among you feel like they are smart enough. They waited for a change of character like this. Right? After waiting for that change of character, what happened? Market boom, take them out. So for this change of character to happen, even the person that got in as an aggressive entry would have entered much more position. So the fact that market got to a supply and it changed character, there will be more participants. Because everybody have heard that be a patient trader, be a patient trader, be a patient trader. So now they are patient and they still get fucked up. So what does that mean? That means there's a sort of a manipulation. And the manipulation is as a result of a drop base and a rally. So inside the drop base and inside your rally base rally, there has to be a drop base and a rally, which means there has to be an inducement. But in summary, there has to be a smart money reversal, a break of structure to the downside and a break of structure to the upside. That is a smart money reversal. Break of structure to the downside and break of structure to the upside in an existing bullish trend, or a break of structure to the upside and a break to the downside in an ongoing bearish trend. This is a smart money reversal. Some people call you SMU. Yeah, SMU. I mean SMU. I mean one English like that. SMU.
MSU.
MSU. Some people call it MSU. So you have to have the smart money reversal inside your base, which means even though you have a low, high, low, high, low, high, low, and you have a base like this, you still have to investigate the base, because this one now has caused an inducement, which makes it valid. Now, imagine you now have this. This is how the second one will look like. So now, what is going on here? Your base has been mitigated already. So for you to now say, Kama said a base or a blah, 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 will you say you want to trade this thing? No. Or you have it like this, low, high, low, high, low, then the market start coming. And it broke two structure, true. Where is the base then? No base anywhere. But because what Kama has told you, you might feel like, oh, this is a base. But for this not to happen, and if you now have a situation whereby you have this low, high, low, high, low, the market come. Then it mitigated this guy without inducing anything, just pure mitigation. Then it go. What does this show you? Trend line liquidity. So this base is invalid, because it is a mitigation base, even though it's violated. But people that are trading this buy, let me do it for you properly. Now, it is all about participants in the market. Market is selling now. So people are joining in that sale. Everybody is happy. Everybody is happy. Now we got here. Some people start buying this move now. Now there's a seller participant, there's a buyer participant. Now market now broke two structure. But this is the last base that broke the structure 1 and structure 2. And you call it a valid base. But you forget that market wants to take your money, right? So this is a trendline liquidity. So which means market can just come, react a little bit, then sell off. Then the real sell will now start from here again. Because this is now a flip zone. Because it violated your what? Your fake base. See, in as much as you know the real base, you still have to pay attention to the fake base. Because the flip of the fake base is a POI. Because it is a violation. The flip. So if you say every trap order block, the flip of it is a valid entry. Anything that is a trap, the flip of it, because it makes sense to other people. So when market reacts from it a little bit, create an inducement, make them feel like they are right. Then they flip back from it. It is now a valid POI for you. Because if these people must have think this is a valid guy, now market gets here, a break structure for them, creating a valid drop, base, and a drop. This base violated this fake base. And the base itself also have a smart money reversal, which means it makes these people that are trying to buy this guy, make them feel like they are right by breaking structure before breaking it down. It simply means this is a valid point of interest too. Now, am I making sense? So I can go to the chart. Guys, am I making sense?
Yeah, you're making sense, but I have
Oh,
one.
that's interesting.
Hello.
If you know when enter one,
Can we?
it choke.
Okay. So you guys should mute. So now, let's now go to the chart now. Let's go to the chart. So now, look at this. I want to show you something. See an example of a valid base. We have this guy. We have a low. I'm coming. This guy broke structure right here. Let me make it bold. So you guys should pay attention. This guy broke structure to the upside, break structure to the downside. I saw some of your idolos on Twitter. They are trying to, they are marking this guy to sell from it. And the reason why they are trading it is because they saw a break structure to the upside and a break structure to the downside. So they feel like this guy is protected. Even a protected eye. Let's say market is doing this. I want you guys to know that there is a do and don't in everything. Even if a protected eye like this, external liquidity here, market now come here like this. Now started coming down like this. Remember, he took care of this external liquidity upside and a break structure. But it is what? It does not have momentum and distance. It does not have momentum and distance. So it will fail because it is just a liquidity buildup. It is a mitigation. Why would you want to trade in a point that does not have an inefficiency? Why would you want to trade in a point that is already mitigated? What is mitigation? A mitigation, I've explained to you guys, is the process of market filling an uncompleted order. So why would you want to engage yourself in a point that has a complete transaction? Everything right here now is a complete transaction. It is all mitigated. Even though it is a protected eye, I am not going to trade it. If it's play for you, fine. But for me, I am not. So what I'm going to do as a smart trader is what? This is what I will do. Even though I know that it is fake, because it is a mitigated point, I know. But I know that the flip of it can be useful for me. Like I told you, an invalid point that you know as a result of the fact that you've joined this class, you know that this guy looks valid to other people. But to me, it is a trap because it does not have that Kama explained. That same point is also a valid zone when it got flipped. What does that mean? I said this guy took out an external liquidity right here. But the rule of a protected eye is when an external liquidity gets taken and it breaks structure, it makes this eye protected. But if it must have a momentum and distance, which means it must have an imbalance, then an expansion. But if it does not have it, you know it is going to get cleared, right? So if market now come to it, now drop a rally base and a rally. So that means this base now is a flip zone for me. This base now is a demand. This base now is a demand. Now, I will not just trade the base. I will now investigate this base if it has what? A smart money reversal. Okay, so now let's use this one here for the example. Now, look at the last reaction that happened before they blow the POI away. Now, look at this pullback that happened after. This pullback failed to do what? To fill this gap fully. You can see this inefficiency. You can see this weak. It's weak. That is not even enough. Now, after seeing this break of structure and pullback, incomplete pullback, now let's now investigate the base itself. So now, investigating the base, let's go to 5 minutes. You will see exactly what I'm talking about. Check your network, bro. Are you guys with me? So now, so look at this, guys. In this base, before the big volume, what do you notice? The market shifts momentum to the downside. It breaks structure to the upside, then it what? It breaks to the downside. The same thing that happened here in a bigger picture. Have I been rapping since morning? How are you going to know if the zone would fail? Have I been rapping? Don't ask me any question. You are just going to distract me. Because if you have been listening, I'm explaining it already. I'm explaining something. I'm not done with it. You are asking questions. Don't know why you guys don't even listen to simple instructions. Let me finish the class. And this thing, I've already explained it already. You are still asking the question. The question that is the one I'm even talking about presently. You guys should stop now. So now, looking at this chart, it broke structure to the upside, it broke structure back to the downside. So this was people that are trying to get in at a confirmation entry. They are trying to sell from here. So which means this base has a smart money reversal because it made some people feel like they are right. So that is the point that the market came back to start this buy right now. So that is why I said, even though you know that this point is going to fail as a result of, you saw that, let's say, let me redraw it again. We have an external liquidity right here, as usual. Then market created and induced DI. Then market come, take care of the inducement, but now break structure without a momentum and distance. But so you know, some other people don't know. They see it as a protected eye, right? So market now come here. They saw their confirmation entry, right? Right here. So now we are going like this. We saw it right here. You guys should listen. So market get to their supply. It broke structure. Then it took them out. This guy is a valid demand for you. Not just because this guy is a flip zone, is because that demand has a smart money reversal. Does that make sense, guys? We are still going to have a third session today because I really need to clear a lot of things. So this session is going to end. We are still going to join again the third time so I can explain in length. Okay? You guys are just rushing. Stop rushing yourself. I don't understand. I know what I'm doing. I promise you guys that I will make sure everybody understand the class. So I know what I'm supposed to do. You don't need to be telling me what to do. And you have to listen attentively. And you have access to record. And it's all these people that are asking questions. They are the ones that will not even check the record. That's the funny part. They will not even they might not probably watch the record. They just be stressing all